All right, looks like we have liftoff, folks. Thanks for joining me. We've got a nice group. I've been looking at all the attendees coming on in, and we're going to get started here right on time. Let's go ahead and talk about options trading in a way that's probably very, very unique to you, because what we're doing is in many ways proprietary. If you're doing option spreads, we're going to show you something maybe you're a little bit familiar with, and then we're going to dive into something that you are not familiar with. So we're going to look at high probability spreads. We're going to look at technology to help us along the way, how we can do some trading with the stock index markets, trading in any direction, even non-directional. And we're going to look at our proprietary trade alert technology as well. You're going to love it. And we have a lot of material to cover. And if we have time at the end, I'm going to jump into an automated systems trading platform as well. So we'll see if we have time at the end, but I saved that till the end. Let's just jump into the options. That's going to be our priority today. And before we start, remember, we're speculating. We're trying to make money as markets move up and down and sideways. So let's take a look at the risk disclosure. Anytime there's possibility of profit, there is always risk. So do take a moment and look at that, please. All right, and along the way, of course, feel free to ask questions, use the chat box and whatnot. I'll do my best to respond, although a lot of times I end up answering questions as we go through the presentation. Having done this quite a few times, I kind of know what to expect, what the popular questions are going to be. So we'll get to FAQs as at the end as well. So we'll look at algo-generated options trading. These are pre-built spreads. We'll use one-touch automation with our alerts, and all your risk and profit controls are automated, and of course, bull, bear, and non-directional markets. And then at the end, mention that demo. We'll see if we can jump into how algos can actually trade your account completely hands-free, trading futures contracts, trading systems across many market sectors, metals, energies, stock indexes, currencies, you name it. So that's a lot of fun, and we like using the options trading in combination with the algo trading as well. It offers a lot of diversification and sort of non-correlated returns that call absolute return vehicles. So we're going to show you how to get involved at the end. And what we want to try to avoid, and maybe that's part of the reason you're here, is trusting your gut. We need to look at a process. You're not going to really be able to do this in the long run without a repeatable process. You don't want to end up like this poor guy here struggling with his trades. You want to be like this robot here. And really, how do you trade that chop? The chop bucket, as some people call it. Trading with your gut probably isn't going to cut it. And we're going to get into that, a little bit about who we are. That's yours truly. We're down on the trading floor there, the options pit with some of our traders. A great picture from years ago. We are Altivest since 1997, and we've been doing this a long years, multiple decades of experience as a brokerage firm. We've developed our own technology for our clientele. We're going to show you that. Maybe you've seen some of our presentations in the past or seen us on other sites and working with other vendors. We often get quoted in Market Watch as well. Here's something just from a couple days ago talking about the gold market. You can see here we are. They reach out to us periodically, and other publications do as well, just because of our longevity, having been here a long time and having seen a lot. We're regulated with the NFA and CFTC. We're located in California. And along the way, we have quite literally traded millions and millions of contracts. So I think that could qualify us as experts. I don't know how many more millions a person would need, but we've been doing this a long time. So hopefully we're going to convey all that experience to you. We don't need you to figure this out by yourself. Look at this poor guy here somewhere in his basement. He's got the ticker up there trying to read the stock charts and do some computing on his own. That's very difficult to do. Use our experience. What we're going to show you has been basically built with decades of experience from veterans, people in the industry, have been doing this for many, many years. And just a little bit about myself. I am Eric Gebhard, just about 30 years now, actually. Been doing this since 1991. I'm a co-founder of Altivest, and I have my BS in Business Administration from the University of Southern California. Go Trojans, right? And maybe you've seen some of our other presentations, and if not, that's fine too. But we're going to go ahead and get started here in just a brief minute. And some people will ask, well, how did you get interested in this? I can recall I had an investments course. It was upper division business class, and we were looking at options markets. Here's my textbooks, and we're going through all the modeling and the Black-Scholes and this and that and the other. And it was interesting, but it's actually, it's very, very granular, and uh, it's heavy when you get into all the formulas and whatnot. But what made it interesting was the background. We were looking at crude oil prices had doubled in value, gold prices had jumped. You can see the graph there. So we were looking at all the instruments and so forth against that backdrop, and I found it fascinating. I did get involved in securities, have my securities licenses, and ultimately, though, I thought futures and options might be just a little bit more interesting, and that's where I've been since. All right, well, great. So with that said, let's go ahead and get into the heart of the presentation. I'm going to shut off the webcam. That way you have a little more space on the screen to see the presentation now that the introductions are over. Okay, barriers for trading. Tell me if you can relate to this. I'd like to hear your feedback, or see your feedback at least in the chat box there. Day trading, it's not that easy, folks. Less than 1% success rate. Do you believe that or not? Here's the Journal of Financial Markets. Let's take a look here at what they had to say in their study from a few years ago. They said here that less than 1% of the day trading population is able to predictably and reliably earn positive abnormal returns net of fees. So what can we do about that, knowing that maybe the statistics have the deck stacked against you? Well, here's another thing here I just read in the journal last week, I guess it was. Social media stars are moving markets, and they're popular because they never criticize a stock, meaning they're always bullish. It says here, day trading does not produce long-term wealth for the vast majority of people. These influencers prey on the part of the human brain that has few inhibitions and that will think, I will be the exception. Speculation leads to other kinds of very high risk behavior. So I think it's important to recognize that. Doesn't mean there aren't some people who can make it work for them, but by and large, odds are heavily stacked against you. And this is crazy too. It's all bullish. You have a long-running bull market. So what's making these people popular online is all the success stories and all the hot tips. But when their message or a message is bearish, the viewers turn away. So that's why you end up with this nonsense here. Pool parties pumping up the price of a stock. And you have people here on social media pushing stock tips. This is fascinating. 2/3 of adults who have been investing for less than 3 years use social media to make stock trading decisions. Does that seem like a wise move? I don't think so. That's what they call selling a story or a narrative. And, of course, it has been working in this relentless bull market. So everyone, I guess, considers themselves pretty smart in that circumstance. But remember, when you're day trading, that takes time. You've got to be in front of that screen most of the time and watch those trades or babysit. But if you do trade, day trading in particular, I'm kind of picking on day trading, and you'll see why. But are you actually going to beat the market? Maybe you can make some money doing it, but are you even beating the market? Remember, it requires precision, picking the correct market, the direction, the strategy, your entry timing, and probably most importantly, how do you manage the risk and reward? What's your exit strategy? That's often neglected. So how about beating monkeys? Mark Skousen here did a study, a famous economist, says here in their study, monkeys beat the index by 1.7% in their hypothetical monkey trading study, outperforming that index each year. So thought this was a good one to put in there. Hopefully we all chuckle a little bit about this guy here or gal being the best trader out there. And even the best and the best, the hedge fund stars. I know this is a year or two old, but I think there's a lot of truth to this still. I can look that up and see where we are on the hedge fund indexes and their overall performance. But random darts beat hedge fund stars. So number three, what's the third hurdle? Emotions. It's really us trying to control our emotions. Remember, markets are always correct and we aren't. It can be expensive convincing the markets that you are correct. Ed Sequoia from Market Wizards, great book. There's a series, 2 or 3 of those as well. So you don't want to end up like this. That's what we're going to help you avoid, hopefully. And how about part of the reason with our emotions is what? Noise. You have all these different opinions running through your head. You've got the pundits, the talking heads. Everyone's got an opinion, enough to drive you crazy. You ride this emotional roller coaster with your positions. Don't act like it's not happening with you, because I know it is. It happens with everybody. Even the people have been doing this for decades. So, how many of us can relate to that? You have, the euphoria as you're making a killing and then it starts falling apart. Now you're desperate and you surrender with the white flag. You capitulate and now you're depressed. And then all of a sudden you see a little bit of relief and hope, and then you're optimistic again. And the whole cycle repeats itself. So Motley Fool says, our worst financial enemy is ourselves. I won't go into all the detail, but I think we can relate to this. Confirmation, anchoring, and recency bias. I think we all know what that means. Essentially, this sums it up. No other words necessary there. Okay, the third hurdle here is algorithms. It's a completely different landscape compared to even 20 years ago. 80% of the stock market dominated by machines, causing all the drops and the rallies. It's definitely mechanical. You can see the activity happening almost day by day. And robots are outwitting their humans. Humans on investment picks, according to Bloomberg. Absolutely, it was only a matter of time. So that's what you might call revolutionary trading. Here's how it used to look, folks. Not too long ago, something I did here with this video a few years back. So it's kind of a fun video, grainy, but still gives you an idea. And here we are now. This is what we're trading against. Here's what we're up against. So how can we use automation, machines, technology to compete with options trading? So let's take a look at our proprietary technology and strategy and a very unique indicator along the way. We think it's the best way to trade options using bullish, bearish strategies or even non-directional strategies for trading stock index futures. That's what we're trading here with these options. And we have a unique automated indicator called the RTI, and it's automated. I'll show you that. But first of all, why an index versus an individual stock? Well, this is sort of self-evident, stating the obvious, but it's worth just repeating briefly. An index is always going to be less volatile. And of course, I mentioned our proprietary strategy. It cannot be applied when trading stock options. And really, it's more convenient, quite frankly. You can look at just 1, 2, or 3 markets, I think there's something like, I think there's over 6,000 ETFs. Think of that. So we like this space a lot. We're going to show you even more why we like it. And just an example of the volatility here. Here's the S&P. It almost looks boring and quiet compared to something like Tesla. And maybe Tesla's not totally fair comparison, but nonetheless, large cap stocks can, move a lot, 50% in a year. But that's not something you're going to see the S&P do. Maybe as an outlier, right? So with that, let's get into some options, a little background. And if you're familiar with trading options, collecting premium and so forth, this will go quickly. If not, it's real simple. Just understand this concept. Insurance companies, you know how they make money. You pay them premiums. They basically are selling and managing time. They insure themselves by always hedging. They're consistent and they're patient. and they just use probabilities. Long-term odds favor them. They use statistics, actuarials, expected returns, so on and so forth. You get the idea. So do casinos. Imagine that. That's why they're all, these big, beautiful, fancy buildings. They're using math to take money from the public. If you trade that roulette wheel, spin it on that zero, you're going to lose $5.26 on average per spin. So that's the house edge. So they'll gladly have you play roulette for as long as you want. And even though once in a while you'll win, long enough timeline, they're going to beat you. So how do we be the house when trading options? I guess that's the question. Well, let's look at higher probability outcomes, not grand slams using a baseball analogy, but what about base hits? Those are short option strategies where you collect the premium that somebody is paying you. You can use the strategies that we're going to talk about for all market conditions, and we're going to look at these higher probability outcomes. And these are called credit spreads where you collect premium. Remember, these are covered or insured positions, and I'll explain that. Your risk and reward is always predetermined, and they can be non-directional strategies, meaning you don't have to be bullish or bearish. And don't worry about this graph. I'll show you in the demo, but there's a large margin of error. Here's the S&P moving back and forth, and here's the upper boundary of the trade and the lower boundary of the trade. Very large margin of error. Before we jump into that, let's look at two things. We're not going to get really esoteric in talking about all the Greeks, and if you know all that, great, but we don't need that. We just need to know two things. It's very simple. One is delta. It's the approximate probability of expiring in the money. That's all it means. So if an option has a 0.25 delta, that's a 25% chance it expires in the money. But conversely, notice the yellow highlighted portion, that means 75% chance it's worthless. So that's how we're going to focus on our trades. We're going to look at that chance of expiring worthless or out of the money. Remember, delta numbers are always moving with price and time, and it is not the probability of a winning trade. So keep that in mind as well. And then the other one is theta. All we're going to look at is delta and theta, and that's simply time decay or sensitivity to time when you're looking at an option. Remember, options have limited lifespan. If you buy or sell an option, it's good for a certain amount of time. So theta represents time decay, and it's a negative number. For example, if an option's at 10 points, your theta, let's in this example, negative 0.05, and that means the next day the premium would slip from 10 to 9.95, and the next day after that from 9.95 down to 9.90, etc., etc. So that's all that theta decay really means. And this is what it looks like on a graph. As you approach time zero, the percent of the premium drops and drops and drops and drops. Of course, if it's out of the money, then it expires worthless. So here's an example, selling a call spread. The red line here represents a 45.50 call on the S&P 500, and you sell that call and you collect 4.5 points. Remember, you're selling the option, you're collecting the premium that someone's paying you. But simultaneously, you buy the 45.70 call, which is the blue line, and you have to pay money. You pay the premium now to someone else, but the net result is you collect $112.50 minus your commissions. So that's selling a call spread and collecting that premium. Same premise with puts. You sell this 36.60 put, you collect 3 points. Simultaneously, you buy that 36.40, you pay out a point, but you collect that net premium. That's the whole idea, is the net result of that transaction is something that you're collecting. Of course, if it's positive in this case, and it is. Remember, these are not naked options. These are always hedged or insured, as we might call it. Your risk is capped. These are covered option spreads. No naked options trading. If you're doing it, don't. I don't think I've ever, well, I've never seen anyone sell options naked and not eventually give it all back. Let's just put it that way. So don't. And here's a big advantage when you're doing only covered options. No margin calls. The market will not force you out of your positions because your risk is already covered in advance when you place the trade. You don't have the market trading you and jerking you around. And of course, you don't have that unlimited or non-defined risk. Now, here's an Iron Condor. It's simply the combination of the put and call spread we just looked at. Very, very simple. You have a call spread that you sell above the market and a put spread below the market. And that's really what it looks like. It's just that simple. You do this simultaneously. You don't want to leg in. And then here is what some people call our weird strategy, and that's okay. They can call it that. Something we created a few years back, and it's proprietary to us. It's a high probability premium collection strategy. We call it the Dragonfly. It has 6 legs. It's for income generation, similar to the Iron Condor. And it's simply a variation on the Condor. And let's look at it. I think it's helpful to visualize it. So let me show you how this works. You'll notice the 4 here, meaning you're selling 4 of these 40-60 calls. You buy 3 further out of the money calls, and then 1 closer to the money call. You notice here, this is 50 points closer to the money compared to the 4 that you sold. So you own it. And it's 50 points closer to the money, meaning it's going to gain in value much more rapidly because of the higher delta. And it will lose value not as quickly because it's closer to the money as well. And then you have the same structure on the bottom. Selling 4 puts, you buy 3 further out of the money, and then 1 closer to the money. And then we're going to look at that in some simulations here. And of course, there's other variations on that. I'll go back, but you see, you could just do one side. You could do calls only or puts only. So here's what we call a half Dragonfly call spread, or you could just do the puts as well if you want to collect premium on calls or puts. And then you can do directional strategies. And I'll show you that briefly here, but we don't need to read all this. It's just a bearish strategy we call a bear hedge. And simply you are selling an out of the money call spread here. You collect the money to sell that spread, and then you use that money to buy an out of the money put spread. So of course you could do that with a bull hedge as well. But remember, ultimately, we've talked about collecting premium. Those are more higher probability outcomes. And when you do so, you're a credit spread trader, and you want to be like Milton here from Office Space. You want to be boring, and you're just really hoping that not a whole lot happens. But of course, it's never that easy, right? It's never that easy because you're gonna need to manage that trade sometimes when the markets are moving maybe more quickly than you anticipated. But how do you do this all? How do you put this all together? Jackie Chan's confused, so we're gonna help you, Jackie, and the rest of you watching. What to buy and sell? What strategy to apply? At what price? At the right time? How do you manage the risk and the reward? The answer is Theta Trader, some of our floor traders. Good picture down there in the trading pits. These are pre-built option spreads. Our proprietary algo will create what we call Theta trades every day. We use advanced strategy automation, bull, bear, and flat markets. Remember automated risk and profit with the risk thermal indicator. I'll show you that. It's simple, effective option spreads with automated profit and risk management. So we're going to jump into a demo. Give me just a brief moment to switch over to the demo platform. Yep, and I see some comments and questions coming in, so keep them coming. If you have any comments or questions, go ahead and pop them in there. But along the way here, you're probably gonna have a few more, and that's okay. So let me show us what we're looking at here. This is the dashboard for Theta Trader. This is our demo account I use for webinars. And you'll notice this section here for Theta trades. I'll explain that. Here's your open short positions or sold spreads. Any open bought or long spreads right here. Here's your account info. This is pulled directly from your AltaVest trading account. It's all integrated. And then any current quotes here as well. And the best thing to do is just probably start at the top with Theta trades. There are bullish strategies that are pre-built, bearish, and non-directional. And you'll notice the markets here, the E-mini S&P 500, NASDAQ 100, and Russell 2000. These are the three markets that we're applying here our strategies to within Theta Trader, and I'll tell you why after we get through the demo, but I think it'll kind of become clear. And we have the Dragonflies we talked about and Iron Condors. So we'll go ahead and look at an Iron Condor. So these are all pre-built and generated by our algorithm, anywhere from 16 to 51 days till expiration. And you see the strike prices are already chosen. And of course, all the expirations are already pre-selected. Your maximum profit potential at expiration is calculated, and then this is your targeted annualized return at expiration. And I want to make sure that everyone realizes this number here, this column, is not suggesting that if you place this trade, you'll make 143% in the year. What it means is it's really just sort of extrapolating into the future. So with 16 days left, if you place this trade and it reached full profitability, and then 16 days later you did the same trade and you kept rolling it over and over and over, that would be the result. But really, this number here is to compare one trade to another. That's why that number is there. All right. Well, let's check out this one. And people ask, well, how do you know which expiration and this and that and the other? Well, the algorithm chooses it. And how do you know what strike? Well, the algorithm chooses it, and I'll show you that here. Here's what this trade looks like. You sell this call spread out of the money, you sell this put spread, you collect the premium on both sides, and that's basically the structure of an Iron Condor. You can see just the call side alone, the put side alone, and then here's the Iron Condor. So let me walk you through this. You'll see the market traded, the E-mini S&P 500, and that's the end of month expiration, has 51 days till expiration. Here's your expiration date, settlement value. I won't go through everything here. And cash required, this is one to pay attention to. This is how much is needed to place this trade. And your profit potential at expiration is $84. Targeted return on cash is just over 9%, and targeted annualized return. Now here are the strike prices. So this is the put that you're selling, a $39.90 put. And here's the call you're selling, a $47.70 put. And of course, you could change that if you wanted, but you're really defeating the whole purpose of Theta Trader because it's already building it for you. Now, here's the question we get. Why would you risk $900 to make $84? Well, remember, we're looking at higher probability outcomes. So the put that you're selling has a delta of 9.92%. So that means there's over a 90% probability that this put will expire out of the money. And the same thing with the calls. High probability outcome by selling it, 6.39% delta. You have essentially 93% plus probability that this call is going to expire out of the money. So those are the higher probability outcomes we're looking for. And then it always defaults to a sell because you're selling the Condor and collecting premium. And it always defaults to a quantity of 1, it just starts at 1, but maybe you want to do 5 of these, and you'll see the cash required moves up accordingly as is the profit potential. And your value is already predetermined and pre-built for you, although you could change it if you wanted. But we'll go ahead and place that, and that's it. This demo, of course, assumes the order is filled, but that's as simple as that. That's how easy it is to place the order. And then, of course, we handle the rest with our technology. Now, I want to jump in at a an analysis here of a condor versus a dragonfly. So here is a dragonfly, and we'll look at this one, this November week 3 expiration. And again, the algorithm has pre-built this. And let's look at a graph here. The overhead view is always helpful for me, give some perspective. So this is the structure of the calls and the puts on this dragonfly. And let's break it down. Notice the cash required is 4,700 compared to 900 and change with the Condor. And that's because you're selling a greater quantity by default. Every dragonfly, you sell a minimum of 4 puts and 4 calls. If you wanted to do 2 dragonflies, you could change the quantity and then it moves in increments of 4. And you'll notice the cash required moves up as well. And now you'll notice here the targeted return on cash is a little bit lower compared to the Condor. And part of the reason why really is essentially because remember here on the graph, you are buying this 47.90 call and buying the 39.20 put. So you pay money for that. That's like buying additional insurance. Also point out that in this case, the call that you buy and the put that you buy are 50 points closer to the money compared to the ones that you're selling. And that will change depending on what the algorithm determines. Let's assume we're going to do 2 of these dragonflies. We'll keep the price the way it is. And you'll notice here the deltas in this case are also that higher probability outcome, 9.75 and 6.60. So you've got, 90+% and 93% probability these options here will expire out of the money. And you go ahead and place that trade, and it's just that simple. And what I want to show you now is how to compare a dragonfly with a condor, going back in time. Part of what we offer is a trade simulator. You can go backwards in time, like a time machine to trace your to basically analyze your options spreads. I don't think I've seen anything like that. Maybe some really, really high-end options software has this capability, but I have not seen it. So I've already gone here, created the simulator, and popped up a few, and we'll go ahead and look at these. Let me squeeze this down. You'll use these buttons along here. You can go all the way to the end. You can go step by step or day by day. You can go backwards, and you'll see day by day. And let me show you how this works. You'll notice here everything's fine. This RTI is green. I'll explain that soon, but really that means good, do nothing. The trade here, the P&L is green. It's turning profitable. And then look at this. It turns yellow, it turns orange, elevated risk. Trade went from profits to open losses here. Because why? Well, it started moving up very quickly towards this upper boundary here on the calls that you sold. So that makes sense. Then it comes back down. Now the trade's turning profitable again. Theta decay starting to work. And finally it turns blue. And what does blue mean? That means take profits. The trade is matured enough or ripened enough to take profits, take your money and move on to something else. Now, that was on June 24. And that's with the end of month June Condor. So here is the end of month Dragonfly for June. So in other words, on May 1st of 2020, you placed that Condor trade. We just ran through the result. But what if you did the end of month Dragonfly on May 1st instead of the Condor? Let's take a look. Look at this. On May 28th, it turns profitable, turned blue. Remember here, you had to wait till June 24, almost a month more time sitting on that trade with the Condor compared to the Dragonfly before it matured enough. And I want to make a point here about the profits here and the RTI and the blue signal. This can be automated. You do not have to screen watch. You do not have to babysit. The RTI, when it triggers a profit-taking signal, if you set it up to automate it for you, then you don't have to do anything. Theta Trader monitors the position and will submit that order for you. Just that simple. Let's look at a couple others. Here is another Condor from earlier this year. Yellow means slightly elevated risk, and you can see why. Market's moving higher and higher, closer to that upper boundary. And orange is even more elevated. We're right on the on the razor's edge here with this Condor. And then it turns red. Red means too much risk, and you're going to take a loss. There's not enough reward left in that trade to make it worth the risk. So that would be a risk-taking or a trade management signal to take a loss and move on. And again, if it turns red or blue, this can be automated, and I'll show you how to do that in just a second. So that was on March 4th, and that was the end of month April Condor. So here is March 4, and here's the end of month April Dragonfly. Why don't I just go right to the end, save some time. So look at this. On March 24, you had an opportunity to take profit on that Dragonfly. So after being in the trade for maybe 3 weeks, it matured enough. And then, of course, it kept hanging around that profitability zone here just a few days later as well. So that's why we love the Dragonfly. There are many times where it's going to behave differently than a Condor, just depending on market conditions. Doesn't mean a Dragonfly can't take a loss. It just means that in certain circumstances, you're going to have opportunities to close out that trade much earlier for a gain and apply your money elsewhere. And also there are times where a Dragonfly may take a loss, and of course, a Condor may take a loss and a Dragonfly won't. And here's another example. November 20 of 2019. And I don't quite remember some of these here, what happened. So it's kind of, I'm discovering along with you here as I play this out. It's kind of fun to play it. Or of course you can skip right to the end. Turning yellow, elevated risk, and then it turns red. You take a loss on that Dragonfly with 16 days left. So this is the end of month January 2020 expiration for a Condor. Let's run through the Dragonfly. And look at that. Instead of turning into a loss like the Condor, the Dragonfly actually turns profitable with almost a month of time left. So how's that for a big difference in how they react? Also note here too, let's see here. Yeah, so this is a 40-point difference on this trade, 32.90 to 33.30. So again, it just depends. The algorithm will make that decision for you. So this is how you would do it under my account. You would go to settings and you click activate risk manager or activate profit directive, and it's just that simple. Once you check those boxes, click on save settings, and then Theta Trader will monitor all your positions and any short premium positions or credit spreads. It will monitor those and close them out when they reach either red or blue. So that is how that works and how simple it is. Also want to point out we offer daily research, proprietary research. This is called TradeScope. We look at some of the technicals and provide a guidance moving forward on our market outlook. And we offer the daily trading summary, basically any trades that occurred for the day and an outlook as to the narrative in Asia and Europe, and even looking forward here. There's some quotes from Morgan Stanley and so forth, and an economic calendar. So people like reading that as well. It's a quick read. And then there's also tutorials. There's videos here. There's education videos as well. And before I forget, let's go back to the dashboard and let me show you how to look at your trading history. We can do that right. Well, first of all, you can look at your open positions here on the dashboard. And you can look at your open positions on one page under this positions menu. So there's 10 short positions here, 2 long or bought positions. Remember, Theta Trader can buy option spreads or just buy outright options as well, or sell them. But it's primarily built to facilitate spread trading because it can be so complicated otherwise. It can be a nightmare and a mess. And this is kind of born out of necessity, really, after having thousands of clients trading all these multiple leg option spreads with us and us managing it all by hand. So that's what was the catalyst behind putting Theta Trader together. But you can see, gives you at a glance how all your positions are doing, shows you your open P&L at that moment. And if you wanted any kind of, for example, any detail, granularity on any trade, you just click on it. And then you'll see here, when you place the trade, this one's only been open for, what was that, 5 days. So not a whole lot of history there on that one yet. And that's just that simple. And then here is your closed position page. You can filter for all the different markets and date ranges, but you'll notice here 17 closed trades on the page, 15 winners, 2 losers. 12 of the positions are short option spreads like we just looked at, and those were all winners. And 3 of them were long spreads, and 2 of those were losers. And don't make much of that. This is just my demo account. I do this with webinars. I don't give any thought as to what trade I'm placing, but it gives you an idea if you're selling premium with these higher probability outcomes. In most market conditions, a lot of those trades and the theta decay is going to work out pretty well for you. But of course, that's why you need trade management, is during the times and when it doesn't. And that's why we love the automation with the RTI. And now let me roll out of this and show you the best feature of all. And oh, one other thing real quickly. Remember we looked at maybe the half Dragonfly position, or the bear hedge or the bull hedge, whatever you want to look at. It's all here too. So that's what a half Dragonfly call would look like. And for example, here's a bear hedge. Maybe you're got a large portfolio of stocks you don't want to liquidate for tax reasons, or maybe you're too emotional, you're hanging on to them, I don't know. But maybe you can do a bear hedge. Here's an October into month bear hedge. So essentially here, you're selling this out of the money call spread, and with the money that you receive, you buy this out of the money put spread. So just that simple, and you'd place the trade just like you would any of the other trades we looked at. We'll do 6 of these just to be different. And there it is. Now, with that said, I'm going to show you the best feature of all, and I don't want to overplay that by saying it, but I think it's probably true because that's what we hear from clients. So really, this allows people the flexibility to not even really view the dashboard very often. You don't even need to log in to Theta Trader a lot of times. And I'll show you why. So hopefully that's not too much to take at once. I think it's very intuitive and user-friendly, and we built it to simplify what would otherwise be ultimately too complex for a typical retail trader. So we've made it even easier. Let's talk about our trade alerts. So that's what they would look like. You receive a trade alert on your phone, and these are one-touch responsive. All you simply do is touch your screen, accept or reject. That's all you have to do. I don't understand how people still have trade alert services where they're sending emails or text messages, then you have to try to copy them. So anyway, that's I think that's well, that's pretty much outdated if you ask me. So here we are. You receive an alert. These alerts are live, meaning they're integrated with your account. You just touch accept and the order is placed for you via our technology, or if you don't like it, touch reject. Here's what it looks like. You get a text alert, a text message, so you click the link and it takes you right to the alert page. You'll get an overview of the trade with a graph, a description. I'll also point out, it's hard to see, I should get a different video, but the size of the trade, the quantity is already pre-sized for you. And it tells you here how much cash is required, the net premium collected in this case on this Dragonfly. And if you like what you see, you just touch accept and the order is transmitted for you. Just that easy. Look at it one more time. And I'll be quiet for just a moment. And you'll get alerts on dragonflies, on condors, on sometimes some half dragons, or even bull hedges or bear hedges, and maybe even some shorter dated trades ahead of a large market moving event. And of course, we can buy premium. Sometimes we have actually bought condors, knowing that those are lower probability outcomes, but of course your reward potential is larger. So that's okay to do that on occasion. But here we go, folks. The Theta Trader platform and technology and strategies and trade alerts, you've seen it all. And now here's how to get involved. We call it our Theta Trader membership. Remember, the software includes the algorithm, creating those proprietary option spreads, simple and effective. You see the RTI automatically managing those trades for you. We like to call that autopilot in some way. We talked about some of those hurdles, and number 3, I believe it was, would be your emotions. So this helps kick your emotions to the curb. You want to sideline those emotions when it comes to trading. So use that automation that we've built into the platform. Simple to do, just click those boxes and it's that easy. Then you walk away from it. If you saw the trade simulator, I don't think any of you have probably seen anything like that. It's a lot of fun to use. It can be very helpful going back in time, seeing how different strategies performed in different environments. So you have the Theta trades, you have the RTI, and the trade simulator. That's software valued at over $3,500. And then remember, you have the one-touch alerts that we just looked at, and these are all integrated with your account. You don't have to mess around and try to log into some other brokerage platform and try to copy the alert. So that can be a real mess, and it happens all the time. Each month, I have someone tell me they're trading stocks, or they have someone's subscription to some alert service, and they do a buy-sell error, or they transpose something wrong, and it's all foobar. But after that, so this keeps this keeps that from happening, keeps the heavy lifting and that weight off your shoulders. So remember that value there, that software, over $4,400. So remember the Theta Trader software, the trade alerts, valued over $8,000. Now here is the cherry on top. You have a private coach to help you with this. Some people don't need this at all. Other people lean on it a little more heavily. Whatever you want to do, that's fine. But you can have one-on-one training set up with your licensed, experienced trader. You can do those screen sharing sessions. You can cover really any topic that you want. So you have a co-pilot, someone you can develop that relationship with, discuss your strategy, review your history. That's valued. In fact, that's way undervalued. I know people are spending $10, $20, $25,000 on coaching and education. You see all the ads on the business channels, and that's all good and well. But with Theta Trader, we include what you need to use our platform, our technology, and we'll get you up to speed on that. And we're not just chat bots. So we're real people with experience putting together something, and that's why people love it so much. So Theta Trader software, the alerts, the private coach, valued over $15,000. I won't go on and on because I want to see if we have time at the end. And of course, this is a little corny, but but wait, there's more type of thing. Yes, don't forget that we have the proprietary research, over $2,900 value for that research, in-house research. Of course, we throw in those online video tutorials that I referenced, as well as tutorials on using Theta Trader, but also on options trading in general. So you add that up, that's a value of over $18,500, and we think it can be that one thing that works for you. I think it could be worth your time. It could save you time. You could cancel other subscriptions and services. It could lower your stress level, I think, take a lot of the emotions out of the equation. I think the answer is yes. And yes, it's true. I hear about it. And I've done it myself. People have paid tens of thousands for option software, trade alerts, newsletters, you name it. You know what I'm talking about. And in the past, we've been in live venues where we've offered Theta Trader memberships at as much as actually $4,000 now that I think about it. But nope, this is a live presentation. We want to make it available. And since you're here with us, spending the time with us together, we're going to offer you an even better deal than that. So $597, that's a huge discount. That's one payment. So I want to reiterate, people always ask, you mean that's every month or that's every year? Nope, that's one time. And there's your link, cf.altivest.com/TT. And there's the phone number. If no one picks up, that's okay. That's my number. So the reason I don't pick up because I'm talking to you right now, but you can call anytime. You can call right now if you want and just leave a voicemail. That's fine too. You can submit your name and phone number in the chat box to me or whatever you want if you had comments or questions. But quite frankly, most people just go right to the order form page. And if they like it, they sign up and they have no excuse because we have a 30-day guarantee, meaning that membership fee, if you sign up and 29 days from now change your mind, let us know. We'll just refund that to you. And no questions, no problem. And if you want a free membership, people love this and take advantage of it all the time. You have a $100,000 account with us, we'll just gladly rebate that membership fee. So that makes it simple. Now here's a few FAQs. How about lower your tax rate? Yes, you can by trading futures and futures options. These are tax advantaged contracts if you weren't already familiar with that. So you're taxed at a blended rate, 60% long-term versus 40% short-term rate. So ultimately that ends up essentially 10 percentage points lower than if you're just trading stocks. So here's an example. If you're trading individual stocks, you generate 20% on 100 grand, you're going to pay 7,400 in tax. Your rate of return is 12.6%. Under that same scenario, if you're trading futures or futures options with us, you only pay 5,360 in tax, 14.64% return, difference of over $2,000, favorable difference, simply because you're trading in a tax efficient space. There's no more itemizing as well. You just get a 1099 with your P&L. Here's a few other questions people ask. Why E-minis? Well, they're liquid, they're efficient, they're cost effective, And they're huge. Little oxymoron there. Minis can be huge. 2.5 times larger than all ETFs around the world and the E-mini S&P 500. Just this one market, the E-mini S&P 500. Bet you didn't know that. And here, look at this here. Compared to the SPY, it's almost 10 times larger. The E-mini S&P, imagine that. So this is where you want to be, folks. 5 additional reasons from the CME group. We won't spend a lot of time, but volume, liquidity, access. Look at this here, July average daily volume, 1.338 million. Superior execution, that's what that volume means. We have all that liquidity and volume. Cost savings of $4 to $15 per contract compared to SPX. That means your bid offer is tighter. And one thing here I want to point out, with the Dragonflies, when you're trading with us, you noticed how it was one order together at one price. It's traded as one object. If you try to do a Dragonfly in the stock market, you can't. It can't be done. It doesn't work like that. You have to break up the position into 2 different parts. You probably have to place a Condor as one order and then fill in the rest of the Dragonfly with a separate order by legging in. And then how do you even track it? You have to track it separately. So well, it just doesn't work. And remember too, you have market makers supporting these E-mini options and these spreads. Basically, it's called actionable liquidity, and everything's traded on the Globex exchange electronically. They have the largest market share on these ES options. You have all the strike prices you need, all the expirations you need. So that's called granularity and coverage. And what that means is when Theta Trader's looking for the strike prices it needs to build a trade, when the algo is hunting for those strikes, it's more likely to find them compared to in the stock market because there's just so many more available and you have that granularity. So in this case here, you see a Condor here in this diagram. Here are the puts and here are the calls. A few days go by and now you'll have another set of puts and another calls available according to what the algo wants. A few more days go by and you'll have another set. So that's what you want to do. You want to keep those positions laddered at different strikes, and you can get that done with E-minis. Another advantage, you're tracking just 1 or 2 markets. The margin use is very efficient compared to stocks, and there's a clear cost structure, and I'll show you what I mean. Remember, these are not securities. They trade at the CME group on the Globex electronic exchange, and here's the key. Every order is treated equally, large or small, and most importantly, there's no payment for order flow. So all that stuff about stock brokerages and everyone's offering free commissions, it's nonsense. It's ridiculous. It's just a marketing scam. It's not free, folks. SEC fining Robinhood because they mislead customers. Traders at Robinhood are actually losing money, even though they think it's free because their execution is poor. There's a guy here that says you save a penny to lose a nickel. I think that's a good way to put it. Of course, Robinhood's been fined. David Einhorn, big hedge fund guy. Order flow, payment for order flow is disguised commissions. If you want the broker to work for you, pay a commission. And this is just the other day. I saw this. SEC is now probably going to clamp down on the whole idea of payment for order flow. And of course, Robinhood is going to have to fight them because that's the majority of their income. So there's the battle for that. So nothing of value is truly ever free. So that leads us to the question, what is the commission rate with Theta Trader? It's 5.25 round turn, that's all in. Our rates are very competitive. And let me explain that. I took this screenshot just a month or 2 ago from a large big box online brokerage firm. And it looks like, oh gee, they're less than you. They're only 2.25. Well, no, that's per side. And then they add clearing and exchange fees on top, and it ends up being higher than what we charge. So our rates are competitive. And what about performance? People always ask, well, Theta Trader is a self-directed platform. So every client makes their own trading decision. And I want to point out too, and I should have clarified during the demo, all the performance in Theta Trader, everything you saw is net of all commissions, all trading costs, it's all net. What size of an account? Well, we suggest a minimum 25 to 50,000. As you saw, Dragonflies are about 5,000 each. You'll want to have multiple spreads going at different strikes and expirations. What type of trading account? You can do IRA, individual, joint, corporate, trust, LLC. We do all the above every week. We've got people jumping on IRAs in particular. That's very popular. Self-directed IRAs. Forbes says there's benefits to that, of course, with alternative assets, which is what we're doing. Diversifies a portfolio by adding investments with a low correlation to stocks and bonds. It can help control volatility and limit downside risk. Here's another comment here, may improve diversification and lower portfolio risk. We agree. And a diversified investment portfolio includes alternatives, can help smooth the impact of market volatility, and may generate higher returns relative to their level of risk over time. You know, look at this. Here are the FANG stocks, the blue line, and here's the Fed or central bank liquidity. I mean, do you see a correlation there, folks? So at some point, the punch bowl is going to be withdrawn from the party, and I'm not sure what's going to hold up stocks. If you know better, I'd love to hear it. Here's our valuation right now. Look at that. GDPs here. So there's a huge disconnect or divergence going on in valuations. Meanwhile, the government tells us there's no inflation. Says, well, if you take out beef, pork, and poultry, price increases are in line with historical norms. Oh, really? Here's the CRB index. It's been screaming since June of last year. I should have gone back further and captured June. It's way off the chart. I think we know, we live in the real world. Governments don't. And look at this. B of A tells us here's the inflation meter. I don't even think I need to explain that. We're kind of almost off the charts here. Look at this big spike in inflation. So that's the Federal Reserve for you, folks. They say they're not causing it, but they can say what they want. I think we all know differently, and they can act like the three blind mice. But the point is, that's what's driving the bull market. It's pretty clear, and you're going to have some alternatives in mind when that party eventually comes to an end. So we like the alternative approach that Theta Trader offers, the flexibility it offers, the ability to maneuver with not only non-directional strategies, but also some of those directional strategies we looked at. So we think it's the best way, using that technology and using that process where it does all the heavy lifting for you. So there is the link for the Theta Trader. And I think I'm going to spend just 10 minutes and let's jump into the other platform I mentioned, if you don't mind. I think you'll enjoy it. So let me switch gears. So make sure to write that down. I'll put that in let me put that in there, CF dot. Okay, everyone, I sent that out to everybody. You can see that in the chat now. There's the link. So you want to keep that handy. And meanwhile, want to make sure you're looking at the correct screen. And I think you are. Yes. Okay. Let's look at some automated futures trading systems. This is our other technology platform. So you've seen our options strategies and our options technology. Now this is for futures contracts. And we'll spend just a few minutes on this. And then of course you have questions or comments afterwards, that's fine. And some people just sign up anyway with it. So that's okay too. And what we're going to do here is I'll explain this real quickly. We're going to explore some systems, show you how to subscribe, how to activate an account, and then how to monitor performance. First thing you'll note is you have this table, and you can customize this table so that it displays any of these criteria that really makes sense to you or that you would like to prioritize. And I'll go ahead and save that. Now it reflects that. You can also use the tops here, click on them, you can sort in ascending or descending order. You can see some of these systems have huge returns, 499%. Now remember, any big number like that also means more risk, so let's keep that in mind. But for now, we'll go back to the table and we'll just go back to default. And you'll notice there are 2,146 systems available on the platform. We're looking at the first page, one of 25 available. And how would you know essentially which ones to choose? Best thing to do is use this tool to filter for systems. There are quick filter tools here. So for example, if you want to look at systems that have been tracked on the AV Systems platform for more than a year and that have been profitable since that time, you click on that. So that's a quick filter. Now you're down to 655. You could add another quick filter. Maybe you want to look at systems that currently have clients trading it. So now you've added that filter instead. And if you wanted to edit that, you could here. Now you have 51 to choose from. You could clear them all, or you could just go here to the advanced. This is really where the power lies, I think, in this tool. For example, you want to look at systems that currently have clients. Say yes. So there's 142. And maybe you want to look at suggested capital amounts. And that's the number that we always have to use, by the way, the suggested capital. And that's the number that all the performance is based on. So maybe we'll go from 4,000. What did I just do there? 4,000 to 40,000. I'm just kind of making up some numbers here. All right, and now here's a good one. What type of system are you looking for? Day trading or swing trading? There are two types. So intraday or swing, we'll go with the intraday. So meaning you're out of the market by the close. And maybe you want to look at just a couple different markets. Let's see, where do I find that? Market traded, here it is. So this gives you an idea of the markets available. Corn, soybeans, silver, the Russell, copper, heating oil, sugar, the euro currency, wheat, financials, bonds, Swiss franc, British pound, crude oil, so copper, stuff you would never trade on your own, but the algos can do it for you. But maybe you're looking at a NASDAQ system and a gold system, just kind of making that up. And you click OK there. So now you're down to a universe of 18 that you can choose from. So that's how you use that filtering tool. You could go on and end up maybe with even just one or two that you like, but that's how granular you can get. And I'll go ahead and turn all those filters off. And now let me show you here. The ones with the gold star are ones that I've saved as a favorite. You can do that simply by clicking the gray star and it turns it gold. And if you wanted to look at any particular system, just click on it. And this is really getting to the meat and potatoes, or the heart of the matter. So every system has a tear sheet, or basically a performance history, and this is what it's going to look like. So here's one for gold, the name of the developer here, and it's a gold contract. It's trading gold futures intraday, in and out on the same day. It's $55 a month, and that's the license cost. And that money goes directly to the developer. So the person or company that developed this system, that's how they get paid when people subscribe to it. And you'll notice up top here, all the past performance history and so forth. The suggested capital is 20,000. So that's the number that you would need to be able to trade this particular system. You can see the performance, and I'll show you this in just a second here, this bottom graph. but you have some big numbers here. Annualized return on investment, 300%, so on and so forth. Best session, 6,300. Worst session, 1,900 loser. Worst drawdown, current drawdown. So it's currently in a drawdown right now, so on and so forth. Percentage of time with open position, only 16.9% of the time. Very high Sharpe Sortino ratios. Those are basically a measure of risk-adjusted returns. And here is a graph, a table. Every system has it. And the white background, you see numbers with the white background, that's all back-tested hypothetical data. And it accounts for all slippage and trading cost. All the numbers, again, account for all cost. So everything is net. And then when that number instead turns from white to this tan color, that means it's now available on the AV Systems platform. So it's now tracked on the platform. And then it turns green, it says live trading. That means it's being traded with live money. So since June, we've had real live money, real clients trading this system, or the system's trading for them, I should say, and doing very, very well. Clearly, September month to date, not doing well, but you can see some big numbers on this particular system. And you know what I like is you can go back in time. You can look at the trade log. Everything's transparent day by day, or you can, I'm sorry, that's trade by trade. This is day by day. So you can see all the trading activity. Won't go into all the details there. And if you want to see how any particular month looked, you just click on that month. You'll see here on June 1st, had a winning trade. $55 was deducted from the account to pay for the license. That's how the developer gets paid. And on the 3rd, there's another trade, a nice winner. On the 10th, there's a loser. The 11th, there's a loser. 16, 17, some winners, so on and so forth. But really what you want to look at, of course, is the accumulated P&L over time. Just like any other kind of trading, you're going to have winners and losers. All right, and if you wanted to actually trade something or go live with it, I'm just going to kind of randomly pick up one here. You click this little padlock and you go buy license. And this one is $220 a month. They're all different. Some are free, but mostly I think $50 to $100 is pretty, routine. And you would subscribe, and you would go ahead and accept the terms of the license. And you click accept. And now I don't know if I even have money in the demo account, so it may reject it, but let's find out. So I've bought the license for this crude oil system. And now if I want to activate, let's click activate, and you can choose to immediately activate or any of these two options here. You can choose to do one contract, or if you did two, then of course you're doing two systems. So it's double the suggested capital required, as well as double the license fee. And you click activate. So I'll go ahead and see what happens. And it's okay if it doesn't work, because that actually is a representation of the risk controls. So if you have this platform that you're using and you try to activate too many systems and you don't have the capital, it will reject your request. And that may happen here. Yeah, that's fine, insufficient balance. But let's find out right now what to do. Let's assume this was active. And this is where you would go under My Systems. So these are all your active systems here. And you'll see here's a crude oil. Here's the E-mini S&Ps. Here's gold. Here's two NASDAQs here. And it's live trading right now. This is live results in the demo here. And you'll notice that, for example, this Atlas here is losing money today, but overall, the accumulated gains are over $30,000. For example, you'll notice the same kind of thing here. Here's gold, $7,500 in gains so far, but it's not in the market right now. Position is 0. Here's a couple NASDAQ positions, or I'm sorry, systems. This one has a position and it's losing 1,300 at the moment, but accumulated, it's about 2,900 profitable still. So that's pretty typical on a day by day. You're gonna have some winners, some losers. 35,000 accumulated P&L on these in the demo. But today, at the very moment, it's losing money on these systems. So that's okay. Just want to point out that just like any trading, these things are going to move up and down in terms of your P&L. So it's that simple. You can look at all of the fills. Everything is transparent. So here's all the fills. You can look at today's session. You can go backwards in time, specify a date range. You can look at all the orders that are outstanding. Here you can see this E-mini S&P 500 has a stop to sell one at 44.41. It's 56.75 points away, so on and so forth. Here's a NASDAQ stop in place. So it makes it very transparent, very user-friendly. And let's look at the top 10 results as we speak. So for the current session, and you'll see for today, there they go. These are the top systems here, 1 through 10 for today. You'll see the P&L on these for today, yesterday, top 10 systems last month, top 10, and so forth. So it's kind of fun to look at these. It might give you some ideas on what to look for. But there's an overview of AV systems, and I will show you how to get involved with that. So give me one moment. And Theta Trader together. Okay, so there you go. So you'll notice Theta Trader, obviously available to you. You saw the full demo there. $597, that's your lifetime membership. There is the link. And then if you want to get involved with Theta Trader and AV systems, you want to have access to that automated futures trading platform. That's what we call our VIP membership, and there is the link for that. And I will go ahead and put that into the chat window as well. And remember, 30-day guarantee either way you go. And if you like the idea of having the option strategies and access to the algo systems, you'll want that VIP membership. People like that a lot. And I'll put that in the box there. All right, very good. And that does expire on Sunday evening, the discounted offer. And then along the way, there's plenty of time to send us an email or give me a call, any questions, or you can go directly to either one of those forms. And once again, the Theta Trader platform, that's your membership right here with the automated options, the trade alerts, the personal coaching. The VIP includes all of that, plus the AV systems platform that you just saw. So automated futures trading systems. And those are actually quite fascinating because a lot of times if particular markets, let's say the stock market's moving one way, the systems could care less. They don't have a bias. They can be short or long just as easily as anything else. So that's why we like that non-correlation. All right, folks, I saw some questions I've already responded to. Any other questions here before we get going? And I will, yes, someone's asking about Canadians. I'm sorry. Regulations are that we cannot accept Canadian accounts at this time, but if you have a valid US residence, that works. Same thing if you're part of the EU. And we do suggest a minimum $25,000 to $50,000 with your Theta Trader account. If you're going to do Theta Trader and AV systems, you need to probably have 50,000 plus. And if you want that free membership, that free VIP membership, deposit $100,000 and we'll gladly rebate that to you. So please take advantage of that if that seems to be a good fit for you. All right, and when we hang up here in just a moment, there will be a survey available. I'd love to get your thoughts and feedback on the survey, good, bad, or otherwise. I can take it. And with that said, I don't see any other questions that I haven't already addressed. So I look forward to hearing from you and answering your questions and hearing your feedback and thoughts. And again, Theta Trader 597, there's the link there. Check the chat box. I put the link in for both of these. And then if you want that VIP, it's only $797, and that includes access to the AV Systems platform. All right, well, great. Have a great day, and thanks for joining us. And I'm glad to be here. It's always kind of fun to do this. So keep in touch. We'll talk to you soon. Bye-bye.